and welcome to Market Domination. I'm Josh Lipton, live from our NYC headquarters. Stocks mixed this Monday. The NASDAQ getting a lift on news of AMD scoring one of the biggest AI wins yet. We're going to be digging into that story and more. Right now, there is just an hour to go until the closing bell, so let's take a look at the major averages here. The Dow is down about 70 points. The S&P 500, your broad gauge, is up about 0.4%. Tech-heavy NASDAQ is up nearly 0.9%. Let's welcome in here tech editor Dan Howley, data and markets editor Jared Blickry are going to help us break down all the headlines. Jared, my friend, I'm going to send it over to you first for a look at the day's trading action so far.
Thank you, Josh. As you said, a mixed market, and that's only because we have the Dow very slightly in the red. Quick intraday price action started out in the green, and we've just kind of been hovering around the flat line there over the last few hours. But the NASDAQ, fueled by that AMD deal and also the chip trade, that has been screaming higher, just a little bit off of its highs here, up about 85 basis points or 8 or 9/10%. S&P 500, pretty similar story to the NASDAQ, but only up about half as much. And we'll also throw in the Russell 2000 to take a look at the small caps. You can see off of its highs there, still up about 0.6%. And in the bond market, we are seeing yields broadly higher. The 10-year T-note yield up 4 basis points to 4.16%. 30-year to 4.76%. That's also a 4 basis point move. And the U.S. dollar index following in sympathy there. So taking a look at the sector action, not surprisingly, it is a market dominated by tech. XLK up 1.4%. Followed by consumer discretionary. That's a Tesla story. We're going to get to that in a second. Then utilities, part of that AI trade, and throw in energy there. That's up 0.5%. All of those outperforming the S&P 500. To the downside, we got real estate, staples, healthcare. Those are leading to the downside, and that is a defensive setup. So pretty bullish as you take a look, especially at the NASDAQ 100. Dow's a little bit different, but guess the standout here is AMD. That's today. This is year to date, up 70%, rocketing through those old highs. So big gain there. Microsoft, though, in software, that's up over 2%. NVIDIA, because of the AMD thing, that's probably a big reason why it's just slightly declining there. And Apple and Broadcom, we'll just throw those in there. Nothing big to talk about as we take a look at some of those individual issues. Now, in the Dow, it looks a little bit more negative. We're seeing some of the industrials fall off, like Caterpillar down 1/3%. Home Depot in discretionary, that's down 1.5%. Then healthcare names, but overall, not a terribly bearish picture. And looking at my leaders and my sentiment indicators, guess what? SOX, that's a chip index, that is up 3.7%. That is leading the way. But disruption also doing well. That's the ARK Innovation Fund, ARKK. Bitcoin at a record high. By the way, so is gold. We got digital and physical gold at record highs. IPO, cannabis, transportation, software, Mag 7, you name it. We've got a broad smattering of strength in that top row. What's not working today? Home builders, retail traders, or retailers, that's XRT, gambling, low volatility, and biotech. So put it all together, we're looking at a broadly bullish day here, Josh.
All right, thank you, Jared. Appreciate it. Well, AMD shares surging. Chipmaker announcing a multi-billion-dollar deal with OpenAI, signaling a new alignment between the two AI powerhouses. For more, we're bringing in Yahoo Finance tech editor Dan Howley. Dan.
Yeah, Josh, this is a big deal, obviously, for both companies, but primarily for AMD, which, this kind of sets it up now in a better position to take on NVIDIA as far as the AI market and AI chip market. And so, this multi-billion-dollar, multi-year deal will basically see them supply chips starting with their MI450 line of GPUs for data centers for OpenAI. And they're obviously very keen on getting as many chips as they can as they continue to build out their data center capabilities and meet consumer demand and enterprise demand as they continue to build that out. So this is going to be a big deal for AMD. On the flip side, for NVIDIA, not necessarily a negative. Sure, they would have loved to be able to been the supplier on this end of things, but they've already been supplying chips to OpenAI for quite some time, not to mention the Microsofts, Googles, Amazons of the world. And so it's not as much of a downer. Importantly, as part of this deal, OpenAI gets about a 10% stake in AMD if they start to meet, if AMD hits certain milestones. It includes a first tranche of shares that would be tied to them delivering those MI450 chips. So this would really set them up in the future. The whole thing works out to about 6 gigawatts of power for GPUs, but that's up to. It doesn't necessarily mean they're going to hit that 6 gigawatt. It's just there's the opportunity to reach that as far as providing those chips. So yeah, we just have to see over time how this kind of continues to build out. But like I said, a big deal for AMD, for OpenAI, a win getting in some of that share of AMD. We just have to see how long it takes for these build outs now.
All right, thank you, Dan. Well, it is the third annual OpenAI Dev Day, providing an early look at what's coming next for OpenAI. This comes as the company has already announced several partnerships in recent weeks. For a closer look, let's welcome in now Intelligent Alpha founder and CEO. That would be Doug Clinton. Doug, always great to see you, my friend. Let's start with OpenAI Sam Altman, Doug, because he's on stage today, right? He's talking to these developers. He's talking to these app builders, Doug, and I'm just curious what you've made so far of what you heard. Did Sam actually have to... Did he have to say anything, Doug? Or are these developers, are they already, plenty excited already?
Well, it's great to see you too, Josh. And I think the answer to your question is there's probably nothing that Sam Altman could say at this point to get developers to be more excited about building on OpenAI. Obviously, I think all these deals that we're talking about, AMD, Oracle, Microsoft already, NVIDIA. I mean, OpenAI is sort of putting their tentacles into everything. They're partnering with everybody to create the largest infrastructure project we've ever seen. And as part of that, I think deliver the highest quality AI model for anybody who wants to build an AI application. So these devs are already really excited, and I'm really curious to hear what they say with Johnny Ive later tonight. That might be the real capstone of the event.
Yeah, I definitely want to get to that, Doug. But you mentioned AMD. Let's just take a beat there. This is a monster move for this company. Doug, it's up 25% in today's trade. What do you make of that move, Doug? Do you look at that and think, okay, yes, hey, that's justified?
I think it is probably justified. I mean, 6 gigawatts, if they do ultimately build anything close to that with AMD, that is a lot of future revenue that you need to sort of write into AMD's forward earnings and projections. And so it certainly does warrant a move. I would also say, though, we're in this sort of like deal economy right now, like we talked about before. It feels like everybody in this AI ecosystem is sort of doing deals. And when the deals get announced, the stocks move up a lot. In many cases, there are substance to these deals, but they're really far out. I mean, we're talking about 3, 5, 7 year sorts of projects. And so I think the question for the nearer term is, now that we've seen the move in AMD, sort of what's next? What can they show us fundamentally that will justify sustaining this move and maybe even furthering this move? AMD is not a stock that we own at Intelligent Alpha, but I think that is the question, just like Intel previously, that I would sort of wrestle with.
There was this question about AMD, Doug, about whether, it was always going to be kind of second fiddle to NVIDIA. Do you think a partnership with OpenAI, does that change that narrative, change that story?
I don't think it does, Josh. I think NVIDIA is still absolutely first fiddle, second fiddle, third fiddle. They're still the go-to vendor. And so everybody has wanted this second source to NVIDIA chips. But the reality is, I think NVIDIA not only has the chips, but they have kind of the full ecosystem, right? I mean, they've got the connectivity hardware, they've got software. And so it's really hard to get away from NVIDIA. And I'll be interested to see, this deal, like I mentioned, it is a multi-year deal. It's kind of out into the future, how much of this AMD capacity OpenAI ultimately puts online relative to NVIDIA.
Do you think with this partnership, though, Doug, was Sam Altman in some way suggesting that there is no performance gap between NVIDIA and AMD, that technically they're equals?
I don't know that he would go that far. I don't know that that's the implication, because I think, again, if you think about kind of the entire ecosystem that NVIDIA brings, it's still really hard for AMD or any of the other AI-focused chip makers to compete with that entire package. And so I think what this deal is really about for OpenAI is saying, look, we've got a great partner with NVIDIA. We're probably going to build mostly with NVIDIA chips, but we also want to have this optionality really to pull in AMD, provided that their technology continues to evolve and that we need that second source.
You did mention, Doug, earlier, I want to get your thoughts on this. I do see these headlines that Altman is going to close the event with a chat with Sir Johnny Ive, the Apple legend himself. I am curious, Doug, what you think we might hear there. You think they tease some OpenAI hardware? You know, if I was an Apple investor, I would be listening very closely.
I think that we are Apple investors and will be listening very closely at Intelligent Alpha. We use AI to do our stock picking, and our models have chosen Apple. And I am curious to hear what OpenAI and Johnny have to say. You know, I think the sort of consensus is that a device, an announcement is probably still something like a year away, and maybe hardware actually in consumer hands another 6 to 12 months after that. So we're still a little bit a ways from actually seeing something happen here. But any sort of tea leaves, any sort of indications of how they think kind of hardware and software can be integrated together, just like Apple has done so well for so long, you know, that's the opportunity for OpenAI. And I'm curious to hear if they drop any hints about what that might look like from their perspective.
Finally, Doug, I know you own NVIDIA, Microsoft, TSM, I believe too. Any new tickers in the portfolio that you think viewers might be interested in?
I'll give you two tickers, Josh. One is First Solar. This is one that I keep getting surprised, but our models seem to really like First Solar at Intelligent Alpha. And I think it's kind of a derivative play to AI. I mean, solar will be, I think, part of the solution to the energy question. How do we power all these models and these AMD and NVIDIA chips? But the other ticker I will give you is actually a new ticker that we just launched, which is GPT. We just rebranded our flagship ETF, the Livermore Atlas ETF. The ticker used to be LIVR, if you've been following us, and it's now GPT. We felt like it was such a great ticker, so memorable for the times in AI that we had to launch with it, and we're happy that we're now out in the world talking about GPT.
Doug, always great to see you. Always good to have you on the show. Thank you, sir.
Thanks, Josh.
Well, coming up, AMD lands a historic OpenAI deal and a major blow for competitor NVIDIA. We're speaking with AMD's CEO Lisa Su. It's an interview you don't want to miss. Plus, politicians are back on the Hill today, tasked with striking a deal to fund the federal government. We're going to explore how likely an end to the shutdown might happen. And buy now, pay later company Klarna, still the darling of Wall Street. We'll explain why that stock is seeing a rise. Those stories and more coming up. With AMD landing an AI mega deal, our executive editor Brian Sozzi sat down with AMD CEO Lisa Su for more insider details.
All eyes are on AMD after a multi-billion-dollar deal with OpenAI surprised a lot of folks out there on the street. Very big deal for this company. I want to bring in AMD Chair and CEO Dr. Lisa Su. Lisa, it's always good to see you. You never cease to amaze me on these deals you strike and what you've been doing here at AMD since you joined many years ago. Congrats on this news. For investors not familiar with precisely what you announced, I'm taking it as OpenAI, AMD are working together to build the future of AI infrastructure. How do you see it?
Yeah, well, first of all, Brian, it's great to be here with you. And yes, today is a big moment for us, a very exciting deal. You know, when you think about where we are today, it is all about AI and how do we use AI to really impact every single industry out there. And the foundation of that is you need to have enough AI compute. And so, yes, what we announced today was a 6 gigawatt deal. It will be, tens of billions of dollars of revenue to AMD over the next few years. And it's really an opportunity for us to even partner deeper with, the clear market leader in AI. And so, we're talking about building 6 gigawatts together. The first instantiation will actually go into place the second half of next year. We see it ramping to, double-digit billions of revenue for us. It's incremental from an AMD standpoint. And most importantly, it actually has us working together on the technology because the technology is just super hard. There's so much we have to do to get it all working. And so bringing, the best of OpenAI and AMD together is what this deal is all about.
A deal like this, Lisa, it doesn't happen overnight. You don't wake up Sunday thinking, all right, we're going to announce this on Monday. When did you start working on it? And what was it like working with a Sam Altman to get this through the finish line?
Well, the key, Brian, and I've told you this before, the key in our world is it's all about roadmap. It's all about the technology. It's all about ensuring that we're meeting the performance capabilities for the most demanding foundational models. And that's what OpenAI has. I mean, they have brilliant engineers. Their models are used everywhere, and so this has been a process. It's been several years in the making. It started with them testing our MI300 and doing some early work on MI300. That moved to MI350. We've done a lot of work on software, and it's culminating in they've given us feedback on what they believe best in class is, and MI450, which we have coming next year, is absolutely that. It's best in class AI computing. And the fact is, having a team that is so much at the center of the global AI build out, being super excited to be a lead customer for MI450, I think it's a great thing for us. It'll push us to get the technology out even faster. And yeah, it's been a couple of years in the making, but we're super excited to be able to talk about sort of the breadth and the depth of this relationship as it relates to our overall AI capabilities and AI business.
Lisa, I'm trying hard to make sure I got all these terminologies down correct. So bear with me if I get one wrong. So what would deploying 6 gigawatts, how does that change the future of AI, and what does that mean to the average person who's only now starting to come across AI agents on various platforms?
Well, Brian, it's a great question. I mean, I think we've all experimented with AI. People, think about ChatGPT and Gemini and asking it questions. But what we're seeing is this is really only the very beginning of people taking AI and using it for improving businesses, for improving research, for improving, all kinds of capabilities. And what we see is, to get more capability, you need more compute. So the work that we're doing is building the foundation of this AI world. And what we want is to make sure, like, every time you have something that you want to use AI for, there needs to be able to have enough compute on demand. And that's why we're talking about building multiple gigawatts. I mean, it is, once you build out all 6 gigawatts, I mean, you're talking about millions of GPUs. And that millions of GPUs will go towards every user having, sort of intelligence at their fingertips.
How difficult is it to build out this type of infrastructure?
It's incredibly difficult. Let me say, Brian, it is incredibly difficult. But we have been working on this for years. And, sort of our technology is really around the chips, about ensuring that, we are constantly looking for pushing the envelope on sort of the next generation. So we're really excited about our MI450 generation. It has 2 nanometer technology, so the most advanced fabrication capability. It has, rack scale solutions. So we're really putting all of these, compute elements together. And the way to think about it is it takes a village to build this all. So, we are, of course, very, proud and focused and dedicated on our piece of it. But it's us, it's our cloud service partners, it's obviously OpenAI and the model users. We all need to come together, plan this infrastructure together, make sure there's enough power in the world for all of this AI compute. And once we put it all together, we deliver just, fantastic capability to the world.
Is there enough power?
There is not enough, but we are actively building everywhere. I mean, this is, all about ensuring that there's enough power, certainly in the United States. I think there has been tremendous focus by this administration of ensuring that, AI is top of mind, and that's super important. It's ensuring that we have enough manufacturing capacity to do this. It's all of the above. And so I would say that the industry is coming together. I mean, this is one of those points in time where you need every part of the food chain to come together and say, we want to do this. We want to build fast. We want to build big. And we're all putting our best efforts, towards this big vision.
So much has happened since I last talked to you, Lisa. I mean, of course, this deal is very much front and center. We have the U.S. government now has a stake in Intel, which wasn't on my bingo card coming into this year. Some would say these tie-ups are causing risks to the AI industry or even the tech industry. What do you say to those critics?
Brian, I would say that that's probably thinking too small. I mean, you have to really look at, what the power of this technology can do for the world. And if you think about all of the applications that can take advantage of AI and computing and sort of the massive investments that will have significant returns on the other end, it takes time to build all this out. So yes, we are investing heavily. Some might say investing ahead of the curve. I actually say investing at the right pace because we want to accelerate. This is a place where when companies and partners make bold moves, it will be rewarded because we will do things that you previously thought weren't possible. We're actually bringing the industry ecosystem together so that we're actually getting the best of each of our teams so that we can actually accelerate the rate and pace of deployment and AI innovation. So, I really believe that this is the beginning of a 10-year kind of super cycle, and we're in the very early innings of this. I think, Brian, I used to say that I thought the AI TAM just for silicon accelerators, sort of our piece of the business, was going to be $500 billion, and some people thought, boy, that was a big number, and now maybe I've underestimated that number, and we have a lot of clear demand across the world for this infrastructure.
The U.S. government shutdown enters its 6th day. Lawmakers struggling to break the current impasse over competing congressional spending bills. For more on what to expect as negotiations falter, let's welcome in now Market Watch Washington correspondent Victor Reklidis. Victor, it's good to see you. So another vote on deck, Victor. What do we think is going to happen here? Do we think this time enough Democrats might cross the aisle?
No, I don't think there's any expectation of that. I think one thing to watch is the White House said today, depending on how the vote goes, we might have some more news on whether and if some mass layoffs might hit. So that's what I'm looking for on that front. Not actually success with the vote, just if there's some more information about layoffs. As you probably remember, last week they said mass layoffs could be coming in a day or two, and that actually hasn't happened. So that's kind of one key next step.
Victor, I guess we're all trying to figure out when this could end, and what are the variables that would depend on. I mean, what are the pain points, Victor? What are the pressure points coming up that could force an ending to this?
One's coming up on Friday. That's when some federal employees would be missing their first paycheck. Another one will be on October 15th. So that's the middle of next week. That's when the military could miss its first paycheck. So we've seen in the past when you have something like a missed paycheck, that puts some pressure on Washington. During the last shutdown that ended in January 2019, the Coast Guard missed a paycheck. And that kind of helped put some pressure on Washington. So that's one key pay point that's coming right up.
What does the most recent polling say, Victor, about who the American public's blaming for this? And I'm also curious, whether we have polling of just rank and file Democrats and whether they support this, Victor.
I have to say both parties seem pretty comfortable with their positions right now, and I think that's one reason why it's looking like this shutdown could go on for a while. We look at betting markets as one thing. They're not always right. Sometimes they're wrong, but it does give you a sense of maybe what a consensus is. And Kalshi is showing like 21, 22 days is how long this shutdown could go for. And I think a lot of that is just because, the Democratic message is they need to fight against Trump and the Republicans. This is time to stand up. Whereas on the Republican side, they're saying we have the clean continuing resolution. Democrats should support that. What they're trying to add with Obamacare subsidies is an extraneous thing. So, I'm not totally convinced on any of the polling. I think I would just more say that right now, both sides seem pretty comfortable. That could change at any time, but right now, that's how it looks.
Do you believe, Victor? I mean, I guess I'm trying to figure out who we think has the more compelling argument. I mean, if the GOP's messaging is, listen, we can talk about the Obamacare tax credits, but, we can discuss that, but not during a shutdown. Do you think that is more compelling to the American public?
I think we're so divided. It kind of comes down to each partisan feels they have the stronger side, but it's really hard for me at the moment to say who's winning. If it was clear, then we'd have a better chance of the shutdown. It'd be looking like the shutdown was going to end soon, but we don't have that right now.
What about the theory, Victor, that Schumer is doing this for a few different reasons, but one primary reason is because he's concerned about AOC primarying him? What do you make of that theory?
Well, I think that's not a bad theory, and he really got into trouble earlier this year. People feel like he didn't stand up enough. So, you know, it'd be if you're in his shoes, you can see why he's doing what he's doing for sure.
What are the chances you think that, Victor, that the government shutdown ends and Democrats get what we want? We extend the Obamacare tax credits.
I feel like the better chance is that kind of what we had with the last shutdown, where on the Republican side, Trump and his fellow Republicans wanted wall funding. They didn't actually get that. They backed down. They said, well, they just accepted more negotiations about that topic. I think that's the most likely thing at the moment. Democrats don't actually get the Obamacare subsidies. They just get the promise of negotiations to do that. And, it would just take a few Democrats to break in the Senate to say that's good enough for them. And as we were just saying, I mean, the missing paychecks could be the thing that gets them to say, this is good enough.
Finally, Victor, listen, I know you're the Washington correspondent, but you're at Market Watch. What do you make? I'm just curious to get your response and reaction to the market's reaction to all this, or non-reaction.
We're all watching the markets regardless of which office we're in, and it's going to be looks like a 7th straight up day for the S&P 500. I think that traders in recent decades, they've just gotten really used to the threat of a shutdown or an actual shutdown, so it just doesn't shake the market anymore. I do think what's different is this threat of layoffs that we were talking about earlier. That could have much more of an impact than past shutdowns. So that's kind of the wild card. That's why it'll be interesting to see what we see this week on that front. There are definitely people who think that the economists that markets are being a little too optimistic this time around, just because we do have this one element that's different this time around with this shutdown.
Victor, great to have you on the show today. Thanks for your time.
Thanks for having me.
Coming up, we're looking at some of the top movers today and exploring what's behind the trending tickers. Stick with us. All right, now time for some of today's trending tickers. Yahoo Finance's Brooke DePalma joins me now for a look at Abercrombie, Papa John's. Maybe we'll talk a little Klarna. Going to start off with Abercrombie and Fitch because that company did get hit with a downgrade at JP Morgan, lowering its rating on that stock from overweight to neutral, Brooks. So they go to the sidelines. They talk about recent field work suggesting below plan Abercrombie revenues with continued conversion average unit retail headwinds, more than offsetting positive traffic growth. Target goes to 103. This stock has been shelled this year. It's down nearly 50%.
It's down nearly 50% year to date. And today alone, after this note, it's down more than 7.5%. So clearly, investors feeling this pressure about Abercrombie & Fitch's larger turnaround plan that's underway. Now, Abercrombie, the namesake brand, has had some success with their leaning into millennials, or leaning into that Y2K. They're leaning into these collegiate, as well as those NFL logo brands as well. But the reality is that Abercrombie still has a lot of work to do. The Abercrombie brand saw same-store sales down, or net sales down, about 5% last quarter. Then on the flip side, you have this Hollister brand that continues to really outperform. That brand saw a growth of 19%. Of course, they're all under the same umbrella. But there's this larger conversation about how exactly Abercrombie becomes what it once was, and that was this key staple name brand. Despite all this, the company does expect net sales to grow between 5 to 7% for the full year, but certainly has some work to do in this turnaround.
All right, turn down to Papa John's. Let's check out that one too, because Bank of America did downgrade that stock and noting sales risk. So that one, BofA downgrades the pizza chain. They go to neutral. Brooke, they see downside risk to forecasted low single-digit U.S. comp sales growth. They talk about intensifying macro and competitive headwinds. Target 50.
Yeah, their target's 50. Right now, the stock is below that. The stock right now is sitting around $46. And I was reading some other, anecdotes from that note that they passed along, and they did mention that the low-income consumer remains under pressure. And that's something that we've been hearing, especially when you want to win in this value environment where all these consumers who are turning to these fast food chains want the best bang for their buck. And so they mentioned that idea of a barbell strategy where you have those low-price items, but then you also have those higher premium price goods. And that's sort of what many, not only, Papa John's is leaning into, but many of the fast food players as well.
You like Papa John's? You're a Papa John's fan?
I will admit, I don't know how often I've been there before.
Well, you know what the issue is. We both live in New Jersey,
and there's not many.
Well, no, there's just
there's pizza.
Also,
there's pizza in New York City.
You got a lot of good pizza options.
Yes.
That's what I'm saying. It's not to knock Papa John's. I'm just saying.
There's other local pizza places.
You got a lot of choices.
Yes, I would agree.
Lastly, Klarna receiving its first ratings on Wall Street following its public debut. So an analyst initiating on this one. Bloomberg has a write-up, Brooke, talking about how the street mostly positive on the company. Made its debut last month. B of A, Citi, JP Morgan, looks like KBW, all starting with buy equivalent ratings. Yeah, what I thought was really interesting was when you take a look at the initiated coverage on Klarna, there's 11 buys, 6 holds. And then you look at Affirm, there's also lots of optimism and bullishness there. Affirm, which is also a buy now, pay later, has 21 buys and 8 holds. And so I thought it was really interesting because going into this buy now, pay later concept is just booming right now. It's grown tremendously year over year, and Klarna actually could make out the most. According to a note from Bank of America, Klarna's currently the biggest player with 111 million consumers and 970,000 merchants, whereas Affirm only has 23 million customers and 377,000 merchants. And so Klarna seemingly is this bigger business. There's more, to get here. And in this environment where consumers are really trying to stretch their dollars, I'd heard from so many sources that really buy now, pay later is the way they're turning to, especially younger consumers who are maybe used to this sort of, tech advancements and things like that. So look out for it. Thank you, Brooke. Appreciate it. Well, there may be signs that healthcare stocks are making a comeback. Our data and markets editor, Jared Blickery, takes a deep dive in his latest edition of Stocks in Translation.
Need a break from the AI trade? Healthcare and biotech just had their best week in about 3 years, a sign of life in an area that many investors have left for dead. Is it time for a comeback? That's what we're talking about on today's Stocks in Translation. Now, of the 11 S&P 500 sectors, healthcare performance is dead last over the past 3 years. Here's a chart from Todd Sohn at Strategas ETF Research that shows just how unloved poor healthcare has been, and that's in green. And it's been that way since this bull market began 3 years ago. And it's especially so when you compare it to the tech sector in white. We're talking $10 billion in net ETF outflows for healthcare versus about $40 billion in inflows for tech. And after an initial pop in late 22, healthcare has been a story of steady selling. Investors have thrown in the towel, according to Sohn. But if price keeps picking up, those outflows can reverse and fuel a catch-up trade. Here's another way of looking at healthcare's shrinking relevance. In this chart going back to 2011, also from Strategas, we're taking a look at its weight in the S&P 500 versus that of industrials and also the world's largest stock, NVIDIA. Healthcare at the top in green has trended down over the last 3 years, while NVIDIA at the bottom in white has rocketed higher. And you can see industrials in blue has just moved sideways since about 2020. That a single stock is nearly as big as 2 entire sectors tells you just how crowded the AI trade is. So diversification isn't a bad idea. Let's take a look at some reasons to consider healthcare. First, it trades with low beta, which is a measure of market sensitivity and lower volatility. Some more on this in a minute. We also just mentioned diversification, especially important when the AI trade cools or just takes a backseat, as it has done a few times already in this bull market. And according to Strategas, healthcare tends to do better than the S&P 500 itself in years of midterm elections in the US, and that's 2026. And some crucial context. Ownership is thin after years of outflows. Not many investors are on board with the trade, which can lead to a game of catch-up if price continues to pick up. And admittedly, that could be a big if. Here's a direct comparison between the largest healthcare ETF, XLV, and the biggest semiconductor ETF, SOXX, which is based on the Philly Chip Index, the so-called SOX. We just mentioned market sensitivity, or beta, which is much higher in the chips. It tends to go hand in hand with volatility, and these measures cut both ways. You don't tend to get as many gut-wrenching spills, but you also have less potential upside. And you tend to get bigger dividends with many healthcare stocks. Chips just don't return as much cash flow to the shareholders. But this can vary quite a bit when you drill down into healthcare's many industries. If you do want higher beta and higher volatility, take a look at biotech or genomics ETFs. They might not pay big dividends, but they will have more potential upside and, of course, downside as well. Big pharmaceutical giants, they tend to pay bigger dividends. Finally, when it comes to valuation, like the famous price to equity ratio, chip stocks have a much higher multiple, which can be a warning. But I'd also add that valuations can stay stretched or also very low for years, so this is not a timing tool. And here's your quick reality check. Rule 1, price must stair-step higher. Higher highs, higher lows, that is the definition of an uptrend. If price does the opposite and goes lower, those outflows will only get bigger. Then remember that rallies can be uneven. It can be very difficult to time a bottom in an unloved sector. And keep in mind that some industries within healthcare, they look much better than others. As an example, equipment does not have nearly a good setup as biotech right now, which leads to the final point. Always understand what you're investing in. Stock and ETF selection matter greatly. Bottom line, the setup for healthcare is here. It's hated, it's underowned, finally moving. But the trade needs to earn investor trust to turn around. As Alpha Trend's Brian Shannon likes to say, only price pays. And tune in to the Stocks in Translation podcast for more jargon-busting deep dives. New episodes can be found Tuesdays and Thursdays on Yahoo Finance's website or wherever you find your podcast.
Coming up, quantum stocks are seeing a surge. Which one should you load up on now? We're talking to an expert in the space. Stick with us. Quantum stocks ripping higher. Names like IonQ, Rigetti, and D-Wave all surging double digits over the past few days as investors pile into the next frontier of computing. For more, I want to bring in now David Williams, Managing Director of Equity Research in Semiconductors at Benchmark. David, great to see you. So let's talk about this move in quantum stocks here. I'm just looking at an ETF that tracks the space, the QTUM. That's up nearly 40% this year. It's up nearly 20% in just the past month, David. What broadly explains this excitement?
I think there's a lot of different drivers or catalysts for this, but some of it is simply just the investors that are warming to the idea, that are getting up to speed, and the inbound interest for quantum has never been stronger, even the last 2 to 3 weeks. And so there's a sense that it's almost a ChatGPT moment in quantum where you don't want to miss that investment before it begins. And so I think everyone is looking for some way to play AI and quantum, and that's what's really driven these stocks more recently.
David, how you think about the commercial quantum computing market? How big ultimately do you think that market could be?
It's quite sizable, and the estimates are kind of all over the place. It's hard to really tell today just because there's so many applications. We're still trying to discover where quantum could be useful. But if you think about quantum sensing and quantum networking, and then quantum computing, it's multi-billions and even into the $100 billion, depending on how you look at that space.
What are some examples, David, some use cases, that are live right now that you find particularly, impressive?
There's quite a few, and we're still in the early days, but these machines are still quite capable of producing results, especially on the research side. A lot of chemistry and biopharma, even in drugs, pharmaceuticals. So we're seeing some real nice responses there, some increases in speed, and really unlocking some new, what we call a quantum advantage, doing something that can't be done with classical systems today. We're still a long way away from having them really interface day to day in our work, but they're getting very close. And if we look at D-Wave, they have a really interesting application in a logistics scheduling platform for a grocery chain in Canada that has found some pretty impressive results. And so it even goes to show that quantum can play out in everyday applications.
Not everyone, David, obviously follows the space as closely as you. Can you it might be helpful, just take a beat, remind us the basics of quantum computers and how they're different than supercomputers?
Yeah, it's really interesting. Quantum computing at its core is nothing more than a typical system. The only thing really quantum about it is at the chip level. So it's at the atomic level that makes it a quantum computer. And so it's using basically the natural states of physics and quantum to make calculations, and it does this in a parallel fashion as opposed to in a logical sequence like we see with the CPU. So it operates much more like a GPU in some regards, but it gives you this ability to do many calculations simultaneously as opposed to one step after another.
I want to get to some picks. Before that, David, I'm also just curious about geopolitical competition here. What is your sense of who's in the lead when it comes to this field? Is it the U.S. or China?
You know, it's definitely challenging to see, and we spend a lot of time in this area. We think that the U.S. has a very commanding lead today, but there's also the things that concern us are the ones that we don't know about, the ones that aren't as in the market or open about their capabilities. We do know they're making some really nice progress, and China is spending significant dollars in investment on the quantum computing space. But my suspicion is that the U.S. is still leading in that regard, and we need to make additional investment to ensure that we stay in the lead.
What about big tech's interest and excitement in this space as well, David? You think of Amazon or NVIDIA. How, if at all, does that change? Does that affect the broader quantum computing landscape?
Yeah, you know, it's really interesting because I think that there is an opportunity for, we talked about AI earlier, but have an opportunity for AI to really accelerate quantum and for quantum to accelerate AI. And so they're very complementary relationship there. And over time, I think we'll see more and more of that. And we're starting to see the realization, I think, even of big tech, that is capable and possible. And perhaps that we're closer to quantum advantage than many had previously anticipated. I know that Jensen Huang from NVIDIA several months ago had talked about quantum being many years away, and he has since changed that tune a bit. But we know that we've got D-Wave and IonQ and Rigetti that are proving really close to being to quantum advantage, and we think the next couple of platforms will really prove that out.
You mentioned IonQ there, David. I know you tell your clients that's a buy. How come?
You know, we like the really well-developed business model. They're participating across all things quantum, whether it's sensing, networking, or compute. We think their platform is making some really great strides, and the leadership team there has done a phenomenal job. They've also got the balance sheet to really support the continued R&D investment. And so they've got a really nice lead there, and we like that approach. We think there's also other opportunities in the space. And what we've been telling investors is that regardless of where you gain your exposure, these stocks are really tend to trade in tandem with one another. So you need exposure. Picking the winner is not always the easiest case, but I think any exposure in the space will be a winning bet, at least for the near term.
You mentioned other names as well. What about Rigetti? Is that another name you'd be recommending?
Yeah, absolutely. I think Rigetti's got an incredibly strong patent portfolio. They've done some really great work on the superconducting side, which is really the most mature platform. We like where they're at. We think that they're making some really great progress on the fidelity side and across their entire platform. So yes, we do like Rigetti, and it's a name that we'd certainly want to own.
Finally, David, before I pile into these names, Rigetti or IonQ, what do you tell your clients some of the broad risks I need to think about are?
You know, I think the bigger risk, obviously, is we're in a momentum area today. I think where the stocks are playing out. And so valuation is one of those things that's very challenging at the early stage when we've got minimal or de minimis revenue. So it's not really about what we think the revenue is going to be this year or even next. We're looking out well beyond that to try to understand where this valuation could play. I will say that in momentum stocks, we've never seen valuation alone really change that momentum. It usually requires something in addition to that. It's either sentiment changing or a rotation, a broader rotation that causes a momentum stock to really begin to go the other direction. And so with all the inflow that we're seeing here, whether it's from ETFs or retail or even on the institutional side, we think there's still a lot of momentum left in these names.
David, great to have you on the show today. Thank you for your time
Absolutely.
and those picks.
Yeah, thank you.
We're wrapping up today's Market Domination. Don't go anywhere. We've got you covered with all the action. Following the closing bell, stay tuned for Market Domination Overtime.